You know, there's a saying in this business: markets don't destroy traders, traders destroy themselves. And that's what I want to talk about today, the silent killer of trading accounts. Now, if you caught the previous video on trading with clarity, you'll remember how we talked about seeing the market for what it is, not what you want it to be. Well, this topic goes hand in hand with that, because nothing clouds a trader's vision faster than the slow poison we're going to uncover today. This silent killer isn't volatility. It's not bad luck. It's not even the market makers or algorithms. It's something much quieter, something that creeps in after a few wins when you start thinking you've got it all figured out. You see, most traders don't blow up because of one bad trade. They bleed out from 100 small ones they never should have taken in the first place. Tell me, haven't you ever looked back on your trades and realized that the ones that really hurt weren't the big losses, but the little ones that chipped away at your confidence? The market has a funny way of humbling those who think they've outsmarted it. I learned that lesson the hard way more times than I'd care to admit. You think you've got a sure thing. The chart lines up just right, and then, bam, the market flips and takes it all back. But it's not the loss that ruins you, it's how you react to it. Do you cut it quick and clean, or do you sit there, hoping it'll turn around? Because that hope, my friend, that quiet little whisper telling you, maybe it'll come back, that's the silent killer. Let's call it what it really is: emotional leakage. It's when discipline slips through the cracks of your conviction. It's when a trader who once followed his rules starts bending them, just a little. Just this once. He says, it'll be fine. But that phrase, just this once, has buried more trading accounts than any bear market ever could. Ever found yourself doing that? You say you're following your system, but deep down you know you're gambling with your own rules. You see, a trader's greatest weapon isn't his chart setup, his indicators, or even his strategy. It's his control. Without it, he's just another gambler tossing coins into the market's fountain, wishing for profit. I've met traders who could read a chart like a book, but couldn't control themselves for 5 minutes once their position went red. They'd stare at the screen, frozen between fear and hope, unable to act. That's how the silent killer works. It freezes you. It whispers that doing nothing is safer than admitting you're wrong. You want to know the truth. Every time you ignore your stop loss, every time you move it just a bit lower, you're paying tribute to that killer. And the market, cold and indifferent, accepts your offering without a thank you. Do you know why most traders never make it past their first few years? It's not because they lack intelligence. It's because they never learned to protect themselves from themselves. Now, back when I was cutting my teeth in bucket shops, I learned early that the game wasn't about predicting where the market would go. It was about surviving long enough to see where it wanted to go. The ones who didn't survive weren't bad analysts. They were weak defenders. They couldn't defend their capital from their own impulses. Tell me, when you look at your trades, do you see defense? Or do you see desperate offense? There's a difference between trading to make money and trading to feel right. The market doesn't care about your feelings. It never did. But the silent killer feeds on them. It feeds on your need to be right, your impatience, your greed, your revenge after a loss. Every time you chase a move because you missed the last one, that killer grows stronger. Every time you double down instead of cutting loose, it tightens its grip. And here's the real danger. It doesn't show up all at once. It watches. It lets you win for a while. That's how it earns your trust. You start thinking your luck is skill, your impulse is intuition. And before you know it, your discipline, that strong, clear foundation we talked about in trading with clarity, starts to crumble. You no longer see the market as it is, you see it through the fog of your emotions. That's when the silent killer moves in for the kill. Most traders think losing money is the pain. It's not. The real pain is losing control, knowing exactly what you should have done, but watching yourself do the opposite. That kind of loss cuts deeper because it doesn't come from the market, it comes from you. Ever been there? Sitting in front of your screen, realizing you're your own worst enemy? Now, don't get me wrong, the market will always test you. It'll throw fake breakouts, false hopes, and traps dressed like opportunities, but it's your reaction that determines your survival. A disciplined trader may lose trades, but he never loses himself. That's the edge no indicator can give you. You've got to treat trading like a war, not against others, but against your weaker self. Every time you act on impulse, that weaker self wins a battle. Every time you stick to your plan, you take back ground. Little by little, you build strength, not just in your account, but in your mind. That's how wealth is really built in this game. Not by finding one big winner, but by surviving 1,000 small temptations to break your own rules. Sometimes traders ask me, "Jesse, how do you keep your confidence after a losing streak?" I tell them, confidence isn't about expecting every trade to win. It's about knowing that you'll act correctly no matter what happens. If you can trust yourself to do that, then no market can destroy you. But if you can't, if you flinch at every move, if you let fear dictate your trades, then you're already halfway to the graveyard, and the silent killer knows that. It doesn't need to make you blow up in one day. It just needs to make you hesitate, to make you doubt your system one small trade at a time. That's how it wins. Now, think back to that last time you broke your rule. Maybe you held a loser too long or jumped into a setup too early. Did it feel like a small thing at the time? Of course it did. But that's how this thing works. It starts small. Like a leak in the hull of a ship, invisible at first. But if you don't seal it, you'll sink before you even realize what's happening. So, the next time you look at your chart, remember this: the market isn't your enemy. The real danger lies behind the keyboard, in the hands of the one clicking the mouse. The trader who can master himself has already conquered the hardest part of this business. But the one who can't, well, that silent killer's already got him in its sights. Emotional leakage is the true destroyer of trading accounts. It's not the news, not the algorithm, not the volatility that ruins traders. It's emotion, leaking quietly through the cracks of logic and discipline. You can have the best strategy in the world, the cleanest chart setup, and still watch your account drain away if your emotions start making the decisions for you. Most traders think the danger comes from the market moving against them, but more often, it comes from them moving against themselves. What does emotional leakage look like? It's subtle. It's not the big meltdown after a huge loss. No, that's too obvious. It's smaller than that. It's the tiny hesitation when you should have pulled the trigger. It's the quiet voice saying, "Maybe I'll wait a little longer." It's the fear of missing out when you jump into a move you never planned to take. It's the greed that convinces you to hold just a bit longer when your target's already hit. That's emotional leakage. It's emotion slowly dripping into your logic until the clean water of your plan turns murky. You see, trading is supposed to be a business of probabilities, not feelings. Every trade should be a calculated decision based on setup, timing, and risk. But the moment emotion enters, the equation changes. When you're afraid, you see threats that aren't there. When you're greedy, you see opportunities that don't exist. It's like looking at a chart through fog. You're still seeing shapes, but not the truth of them. Tell me, how many times have you broken your rules, not because the setup changed, but because your mood did? The hardest part of trading isn't reading the chart. It's reading yourself. Anyone can learn to spot a breakout or draw a trend line. But learning to spot the moment your emotions start leaking into your trades, that's mastery. Because by the time you feel emotional, it's already too late. The leakage started long before. Maybe it began with overconfidence after a few wins. Maybe it started with frustration after a string of small losses. Either way, it seeps in quietly. You might tell yourself you're still following your system. You might say you're still trading your plan. But deep down, something's off. You start tweaking your strategy mid-trade, adding indicators, second-guessing entries. You're no longer executing. You're reacting. And reaction is the opposite of discipline. Every emotional decision is a betrayal of your own process. In my early years of trading, I used to think emotion was something you could fight off, that with enough willpower, you could shut it down. But over time, I realized emotion isn't something you can eliminate. It's something you must contain. It's like pressure in a boiler. If you don't manage it properly, it'll find a way out. And when it does, it always costs you money. The best traders aren't emotionless. They're emotionally contained. They've built systems and routines that keep emotion from leaking into their trades. Think about this. If you had no emotion at all, you'd take every signal exactly as your system designed. No hesitation, no fear, no second guessing. Your results would be the pure reflection of your edge. But that's not how real traders operate. We're human. We get excited, frustrated, anxious. That's normal. The problem comes when we let those emotions steer our actions instead of acknowledging them and sticking to the plan. Have you ever noticed how the trades you take out of emotion always feel urgent? That's the giveaway. Logic moves calmly, emotion rushes. Emotional leakage can happen in both directions. After a loss, it shows up as hesitation and fear. After a win, it appears as overconfidence and greed. Both are equally dangerous. A fearful trader misses opportunities because he's afraid of losing again. A greedy trader forces trades because he's desperate to keep winning. In both cases, the market doesn't care. It just takes what you give it. The most dangerous form of leakage, though, is self-justification. You start explaining your mistakes to yourself in a way that makes them sound reasonable. The market was manipulated. The setup looked perfect. I just got unlucky. You dress emotion up in logic so you don't have to face the truth. That you acted out of feeling, not fact. That's how accounts die, not with one big mistake, but with a slow drip of rationalized emotion. Now, when we talked about trading with clarity in the previous video, we touched on the importance of seeing the market as it is, not through the lens of hope or fear. Emotional leakage is the opposite of clarity. It distorts your vision, clouds your analysis, and makes you see what you want instead of what's there. You might think you're trading your setup, but you're really trading your emotional state, and the market will expose that every single time. You can always spot a trader who's leaking emotion by the way they talk about their trades. They say things like, "I knew it was going to turn around," or "I just had a feeling." They confuse intuition with impulse. They're driven by the need to be right, not the need to trade correctly. But the great traders, the ones who last, they don't talk like that. They speak in terms of probabilities, not certainties. They know emotion is part of the game, but they never let it make the calls. You can tell a trader's discipline by looking at their reaction after a loss. The undisciplined trader blames the market or changes his system. The disciplined trader takes the loss, reviews it, and moves on. Because he knows a single loss can't hurt him, but an emotional reaction to that loss can. That's where the real danger lies. It's not in losing trades, it's in losing composure. Managing emotional leakage starts before the trade, not after it. It starts with preparation. Knowing your plan, your risk, your targets, and your stop before you ever enter. It's about committing to act mechanically once the trade is live. The moment you start thinking, mid-trade, you're in trouble. Emotion fills the space where planning should have been. Ask yourself this. If you could record every thought you had during a trade, how much of it would be strategy? And how much would be emotion? Because the ratio tells you everything. If most of your thoughts are about the P&L, the fear of losing, or the excitement of winning, your emotions are steering the ship. But if your thoughts are about setup quality, price structure, and rule execution, you're in control. Confidence must come from self-control, not from winning streaks. That's a truth every trader learns eventually, though most learn it the hard way. The market has a way of rewarding bad behavior, at least for a while. You can break your rules, take impulsive trades, double your position on a hunch, and sometimes you'll win. And when that happens, it feels good, doesn't it? You start thinking maybe your instincts are sharper than your system. Maybe the rules are just for beginners. That's when confidence begins to rot from the inside. See, real confidence in trading isn't built during the easy times. It's forged in the moments when everything in you wants to act, and you don't. It's built when you follow your rules through losing streaks, when you take the small, disciplined trades that nobody else notices. Winning streaks make you feel strong, but they don't make you stable. Only control does that, because when the streak ends, and it always ends, the trader who relied on luck collapses, while the trader who relied on control stays standing. Confidence is not believing that every trade will work. Confidence is knowing that you'll execute correctly, win or lose. It's not about predicting the market, it's about trusting your process. You ever notice how shaky you feel after a few lucky wins? Deep down, you know those trades weren't clean. You know you bent the rules, chased the move, risked more than you should have. The profits are in your account, but the doubt is in your mind. That's not confidence. That's borrowed courage, and the market always collects that debt. The trader who builds confidence from control doesn't care about short-term results. He measures success by how faithfully he followed his system. Did he enter where his plan said to enter? Did he size properly? Did he cut losses without hesitation? That's the scorecard of a professional. The money follows that kind of discipline eventually. It has to, but the focus stays on behavior, not outcome, because outcomes fluctuate. Behavior shouldn't. When I was starting out, I used to get addicted to winning streaks. 5, 6, 7 green trades in a row, and I'd start thinking I had some secret touch. I'd raise my size, get careless with entries, skip my stops. The streak made me feel invincible, until the market reminded me I wasn't. It only takes one over-leveraged loss to erase weeks of reckless confidence. That's how the market cleans house, and it always does. Have you ever had that happen? Where a single bad trade wiped out not just your profit, but your composure. That's what false confidence does. It builds high and collapses fast. But real confidence, the kind that lasts, grows quietly. It's not loud or emotional. It's calm, methodical, almost boring. It comes from the repetition of doing the right thing over and over until it becomes instinct. It's like a pilot running his checklist. No excitement, no panic, just process. Because when the turbulence hits, you don't want to feel confident, you want to be competent. And competence only comes from control. Now, when we talked about trading with clarity, we explored the importance of seeing the market without distortion, seeing what's there, not what your emotions want to see. Well, confidence built from control is the natural extension of that idea. When your confidence is rooted in control, your vision stays clear even after a loss. But when your confidence comes from a streak, your clarity disappears the moment the market turns against you. That's why traders who win without discipline often lose their way. They mistake luck for skill, and when luck leaves, they have nothing left to stand on. It's easy to look confident when every trade works. The real test comes after a losing day, or a losing week. Can you still follow your system then? Can you still size your trades properly and execute your edge without flinching? That's when confidence shows its true source. If it's built on results, it cracks. If it's built on control, it holds. You can't fake calm under pressure. The market exposes pretense faster than any teacher could. When you risk money, your true level of self-control shows up. Every tick, every candle, every position tests it. The traders who survive long-term aren't the most talented or the most analytical. They're the ones who can stay consistent when others lose their nerve, and consistency doesn't come from excitement, it comes from discipline. Every rule you keep strengthens your confidence. Every rule you break weakens it. It's that simple. Because confidence isn't something you decide to have. It's something you earn through repetition. You train yourself to trust your process, to stay steady through the noise. And once that's built, no losing streak can take it from you. There's a dangerous illusion in trading the idea that a good run means you've evolved, but the market rewards both good habits and bad ones. For a while, a trader can make money breaking rules just as easily as following them. That's what makes the game deceptive. You can be wrong in process and still right in outcome. But over time, the truth always catches up. Confidence built on the wrong foundation crumbles the moment the probabilities flip. A trader once told me, "I trade best when I'm winning." I told him, "Then you don't know how to trade." Because real trading isn't about feeling good. It's about doing good, regardless of how you feel. Confidence that depends on external validation is fragile. You lose one trade and it disappears. But confidence built on control doesn't need external proof. It's internal. It's the quiet certainty that you'll act according to plan, no matter what the market does. Ask yourself this: when you look at your chart before placing a trade, do you feel confident because the setup looks perfect, or because you know you'll follow your plan even if it fails? That's the difference. One is emotional confidence, the other is behavioral confidence. The first vanishes with volatility, the second survives it. Every trader eventually faces the same moment. The market turns, the winds stop, and the noise grows louder. That's when you discover what your confidence is made of. The ones who relied on streaks start hesitating, chasing, second-guessing. The ones who relied on control keep executing, knowing that one trade doesn't define them. Their identity isn't tied to winning, it's tied to discipline. That's why they last. The real battle in markets is between you and your weaker self. Every trader wants to believe they're fighting the market, that the enemy is the volatility, the manipulation, the unpredictable price action. But the market isn't your opponent. It doesn't care whether you win or lose. It's just a mirror, reflecting every strength and every weakness you bring to the table. And that reflection can be brutal if you're not ready to face it. You see, trading doesn't build character, it reveals it. The moment you put money on the line, your patience, your discipline, your greed, your fear, they all show up. Every candle tests your emotional balance. Every drawdown tests your endurance. And every win tests your humility. The weaker version of yourself wants instant gratification, quick rewards, the thrill of being right. The stronger version knows that real success in markets comes from patience, control, and the willingness to wait for high-quality setups. Which version wins on any given day decides whether your account grows or dies. The weaker self is sneaky. It doesn't show up wearing a warning sign. It whispers things that sound logical. Maybe I'll just move the stop a little lower. Or, I'll take this one even though it's not perfect. It looks close enough. Those little compromises are how the weaker self takes control. It doesn't destroy you with one bad decision, it wears you down through small ones. Tell me, haven't you ever caught yourself breaking your own rules and then trying to justify it as flexibility? That's not adaptability, that's surrender. The truth is, the market doesn't punish bad luck, it punishes bad behavior. You can't stop randomness, but you can stop recklessness. The weaker self thrives on emotion. Fear after a loss, greed after a win, impatience when the market goes quiet. It feeds on your reactions. The stronger self, the trader you're trying to become, operates from reason, not emotion. It doesn't chase the market, it waits for it. It doesn't need constant action, it needs precision. The problem is, most traders feed the wrong self. When you trade out of boredom, when you take a setup you know isn't clean, when you size up after a win because you feel unstoppable. That's the weaker self running your account. And every time you give in, that self grows stronger. You're not losing to the market, you're losing to your impulses. You can't fight price movement, but you can fight your reaction to it. The strongest traders aren't the ones who know the most, they're the ones who resist the most. The temptation to act, to force, to control what can't be controlled. I've watched traders spend years searching for better strategies, thinking that if they just find the right indicator or algorithm, they'll finally beat the market. But the truth is, they're avoiding the real work, the internal work. A disciplined trader with a simple system will always outperform a reckless trader with a complex one. Because the edge doesn't come from the strategy, it comes from execution. And execution comes from self-control. When we discussed trading with clarity, we talked about seeing the market clearly, without distortion. But you can't see the market clearly if you can't see yourself clearly first. The weaker self distorts your vision. It makes you see opportunity where there's only noise. It makes you believe you're being smart when you're really being impulsive. Clarity in the market begins with clarity in the mind. And that's why trading is such a psychological battlefield. Not between buyers and sellers, but between reason and emotion, discipline and impulse. The weaker self wants comfort. It wants to avoid pain at any cost. That's why traders hold losing positions longer than they should. Not because they believe the trade will turn around, but because they can't handle the discomfort of being wrong. The stronger self accepts that pain is part of the process. It cuts the loss, takes the hit, and moves on. It understands that the pain of discipline is far lighter than the pain of regret. You can either suffer once when you take a loss or suffer endlessly while you watch it grow. Every trader has two voices during a trade. One says, stick to the plan. The other says, maybe this time it's different. The first voice is calm, rational, and boring. The second is emotional, convincing, and dangerous. The success of your trading career depends on which voice you listen to. Most traders know exactly what they should do. They just don't do it. The weaker self doesn't need to destroy your strategy. It just needs to make you hesitate long enough to betray it. When you learn to separate yourself from that voice, something changes. You stop needing to be right on every trade. You stop chasing moves that aren't yours. You start seeing losses as data, not disasters. That's when the stronger self begins to take control. And once it does, the market becomes less threatening. It doesn't shake you the same way, because you're no longer fighting the market. You're managing yourself. The weaker self always looks for external excuses. It blames volatility, news, or manipulation. The stronger self looks inward. It asks, what did I do wrong? Where did I lose control? That mindset shift is the difference between amateurs and professionals. Amateurs want to feel better. Professionals want to get better. There's something almost paradoxical about trading. The less you try to control the market, the more control you gain over your results. Because control in trading doesn't come from predicting, it comes from managing. The weaker self wants to control outcomes. The stronger self focuses on controlling behavior, and that's where true consistency lies. Not in the charts, but in the choices. Ask yourself this: how often do you lose money because of the market, and how often because of your own impatience? How often do you stick to your plan versus how often do you bend it? The answer to those questions will tell you which self is winning. Every trade you take either strengthens discipline or strengthens impulse. There's no neutral ground. The trader who masters the market is rare, but the trader who masters himself is unstoppable. Because once you learn to silence the weaker voice, the one that seeks excitement, validation, and comfort, you start trading with a kind of clarity that no strategy can give you. You no longer need to prove anything to the market or to yourself. Wealth in trading grows through consistency, not excitement. Most traders never grasp the truth until they've lost enough money to feel it. They chase the thrill, the fast wins, the explosive moves, the adrenaline rush of catching the perfect trade. But that excitement, that craving for action, is exactly what keeps them from building real wealth. The market rewards discipline, not drama. The traders who last, the ones who truly build something over time, aren't chasing excitement, they're chasing efficiency. They repeat the same small, boring, controlled process over and over, and that repetition becomes their wealth. The problem is, excitement feels like progress. When you're in the middle of a trade and the candles are flying, your heart beats faster, your focus sharpens, and it feels like something's happening. But wealth doesn't grow from moments like that. It grows quietly, from following the same plan when nobody's watching, from making the same rational decision, even when emotion screams otherwise. Tell me, when was the last time you made a boring trade and felt proud of it? Most traders can't, because they equate progress with action. They think trading more means earning more. But in truth, wealth in markets isn't about how much you trade. It's about how well you manage each trade. There's a saying in the pits, fast money never stays. And it's true. The faster you make it, the faster it leaves. Excitement blinds you to risk. You see the wins, you ignore the exposure. You scale up too quickly, widen stops. Skip analysis, all because you're in a rush to repeat that high of a big win. That's not wealth building, that's gambling. Real wealth is slow. It's built trade by trade, with consistency so repetitive it almost feels mechanical. The excitement fades, but the results compound. When you think about the best traders in history, they weren't the loud ones bragging about their latest home run. They were methodical, almost unemotional. They didn't get rich by finding one magic setup. They got rich by doing the same thing thousands of times and letting the law of averages do the heavy lifting. Wealth doesn't come from volatility, it comes from stability. That's the paradox of trading. The quieter your process, the louder your results. Excitement in trading is a double-edged sword. It gives you a rush, but it also clouds your judgment. When you trade for excitement, you start needing stimulation, not profit. You start taking trades that aren't part of your plan just to feel engaged. You start ignoring your stop losses because might turn around. That's not trading, that's entertainment.